The GTA real estate market is down 11.9% since the peak in March of 2022. And it's also down 7.8% from last April. There was, however, an increase in average sale price from March 2023 to April 2023, and that amount was 3.9%. So the GTA real estate market has increased 3.9% month over month. I've started this video off by recapping both the drops and increases in the market because it's important to highlight both, not just the positives. If you're new to the channel or you're a returning viewer, welcome and thank you for being here. My name is Macallum and I lead a real estate team here in the city of Toronto, and we specialize in residential resale and pre-construction. This video is going to be packed with data, so if you're looking to learn more, you can go to the first link in the description of this video and book a meeting directly into my calendar at a time that works best for you. The market we're currently in is moving very quickly and is incredibly unpredictable. One of my clients who is currently looking to purchase a home in the Danforth or Leslieville has been competing for a number of weeks. And some of these properties that we've come across have sold for exactly what they're worth, while others have sold for $100,000 more and $100,000 less than their fair market value. Just before recording this video, I looked up a stat and found a property in Brampton that sold for $100,000 more today than it did last year at the peak of the market. At the end of the day, there are buyers and sellers working to transact every single day. And of those buyers and sellers, some of them need to either purchase or sell, and therefore either buy for more or sell for less than value. Now that we've got that story out of the way, let's take a look at the general year-over-year summary for the entire Greater Toronto area. The number of sales decreased 5.2% to just under 8,000, and the number of new listings dropped 38.3% to 18,416. The lack of new listings is propelling the market because buyers have very little inventory to choose from. If one buyer likes a home, there is a high likelihood that another buyer likes that exact same property, which leads to multiple offers. But if there's more inventory to spread out the buyer interest, then we'd be in a far better situation with respect to competition between buyers and price acceleration. So this drop in new listings is incredibly concerning for me. Active listings are also down 20.8%, which means there are fewer listings at the end of each month, meaning there are generally less properties for sale throughout the month, but also means buyers are purchasing up the available inventory. We already touched on this at the beginning of this video, but the average price dropped 7.8% from April 2022 to April of 2023. Listing and property days on market have increased 54.4% and 71.4% respectively. So properties are sitting on the market for longer than they were last year, which shouldn't really be a surprise to anybody. All data presented in this video going forward is specifically related to Toronto, so the 416 area code. Although not overly representative in this chart, April marks the fourth month in a row for price growth in Toronto. As of January 2023, the Toronto real estate market has experienced price increases each month. Is this just seasonality, or is it due to rate pauses, lack of inventory, pent-up demand, you name it? Or maybe it's all of the above. Detached homes currently sit with an average price just under $1.8 million, while townhouses and semis both share a similar average price of $1.3. And condos continue their steady growth, ending April with an average sale price of $750,000. Now let's move into sale price to list price ratio, which shows how above or below asking properties are selling for on average. During the month of April, townhouses and semis remained in the most demand, as seen by a 108% list to sale ratio. And they were quite significantly above detached with 104% and condos with 101%. The most frequent negative commentary around list to sale ratio is that properties in competitive markets, which we're currently in right now, tend to be priced artificially low. So of course they're going to sell for over asking. But not every property is listed low. Some are listed way above market value and sell for less. And some are listed right at market value and sell for their exact list price. So it's important to keep in mind that this is based on every single listing in Toronto, not just the ones which are listed under market value. Interestingly, for almost every property type, we're back to above June 2022 list to sale ratios. The average days on market has dropped rather quickly over the past few months, and we're now seeing properties spend significantly less time on the market. Again, similar to the list to sale ratio we were just talking about, we're now seeing the average days on market drop into the June 2022 territory. And if inventory continues to be an issue in the months ahead, then we can expect properties to spend even less time on the market and sell with more bids. Now, if you've consistently watched my market and stats videos, you'll know that one of my favorite stats is months of inventory, because it's so telling of the overall market conditions. If you're not familiar with this stat, months of inventory is essentially the absorption rate of all available inventory. The data point is the number of months or weeks it would take for all available inventory to sell out if no new listings were brought to the market. And it's a way for us to determine if we're in a seller's, balanced, or a buyer's market. If there are more than 5 months of inventory, then we consider it a buyer's market. If there are 3 to 5 months of inventory, then we consider it a balanced market. And if there are under 3 months of inventory, then we consider it a seller's market. And now, as I was saying that, if you are following along with this graph, you'll notice the highest months of inventory reported for a particular home type in the past year was 4.1 months for condo apartments. So that's into the balanced market territory. But that's the only home type which really hit the metrics for a balanced market. As much as it felt like a balanced market back in the latter half of 2022, we were still technically in a seller's market. What happened after Q1 of 2022 was we dropped so significantly and so quickly that it felt like we were going from a serious seller's market right to a buyer's market. But in reality, we went from a crazy seller's market into a less crazy seller's market. As of last month, every home type in Toronto reported a months of inventory below 2 months, with semis actually being below 1 month. To put this into perspective, it would take less than 1 month for all active semi-detached listings in the entire city of Toronto to sell if no new semis were brought to the market. Now that's pretty alarming if you ask me. And as of April 2023, we are approaching similar numbers as April of 2022, just after the rate hikes began. This metric right here is very alarming because if buyers are still purchasing up the limited inventory and not enough new listings are being brought to the market, we're in for some serious trouble. If you want to stay up to date on the Toronto real estate market, this is the place for you. So hit that subscribe button.